What's up, traders, and welcome to another video here with the FX Big Dog. Hey, in this video, we're going to talk about the Euro-Aussie dollar prediction. Now, a few weeks ago, we spoke about a huge opportunity, traders to take action because we're expecting a 2,700 pip opportunity. What does that mean? That means $27,000 with the standard lot. Traders, for those that got in, are benefiting big time right now with the amount of movement that we've had so far. But we're not done yet. But there's a warning. We are at support right now. We're at support, and which means traders should not be selling at support. So let's go ahead and take a look at the technicals and figure out what's going on. Hey, by the way, Boris Johnson has just failed on his second bid for a UK election on the 15th of October. Wow! We'll talk a little bit more right after this. Well, traders, we did speak about the Euro-Aussie dollar, and we did speak about a prediction of 2,700 pips. And so far, the market has moved anything between 500 to 250 pips that traders could have taken advantage of that if they reacted and took action very early at the stage. This is the deal right here. We're at a very critical level of support. Why? This is a wedge. And now, it's a rising wedge, which means that the market is expected to break sell. But the deal is this, we have to wait and see if it breaks through. Now, we've got some technical analysis I'd like to share with you. I'd like to show you how the market is going to find support and resistance throughout this market cycle. I'm also going to go ahead and talk about Smart Gauge, a tool I'm using right now that's going to help it determine whether or not we've got a good trend, bearish or bullish, based on multiple indicators in just one frame. Let's go ahead and take a look at the charts. Okay. So here we have it. We've got the charts open right here. This is the daily time frame. This is what I'm referring to right about here. Okay, we've got very key support. Check out that daily candle that closed out today. Very indecisive, right? And that is what's going to tell us that the market's possibly going to go ahead and rally up before it comes back down. Look, I'm not expecting price to continue to move up, but I am expecting a retracement move before the market dips back down south. Now, I'm expecting the market to maybe move up to around about 162.61 before selling off. Let's go to a weekly time frame right here. Now, if you look at the weekly time frame, clearly traders, this weekly time frame is still active, right? So I cannot take this indecision can right here and make any decision on that. But this is where we started telling traders sell, 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 sell. We couldn't be more clear about that, and we were very excited about the market moving south. And that's why we said, traders, 2,700 pip opportunity. And that was presented itself at that stage. Now, like I said, we're still fairly new at this drop because this is where we're anticipating price to move back down to. So we're expecting price to eventually break out of this support right here, head south, maybe come back to retest, and then continue to move down south towards that target. Again, very early stages, but we're excited about this. Now, if I go ahead and take a look at the daily time frame, and I'll go to the daily time frame and I look at the daily time frame, the daily time frame looks to me like it could be reasonably bearish at the moment right now. In fact, if I go to my Smart Gauge indicator, which is on the right-hand side right here, you can see that I've got about a 72% indication that we are bearish, right? 72 indication. Now, what is that derived from? It's derived from, take a look right here, I've used a whole bunch of indicators, RSI, average true range, I'm using the Elder Fichardt transformer, the Elder Ray, you name it. I've got a bunch of indicators right here that's going to give me a sort of a guideline as to where we are. In fact, I can go ahead and take a look at oscillators, and my oscillators are saying sell, 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 sell. From MACD to momentum oscillators, you name it, it's telling me sell, sell, sell. Now, traders, I want to go ahead and break this down. This is based off a daily time frame. As you can see right here, it's all indicating daily indicators, right? And so, as I go back and I add all my indicators on right here, and I move this back down south a little bit right here, just give me some room, and I change this now to a, let's go to a 1 hour time frame right here. Now look what's happening right here. Can you see as I move to a 1 hour time frame, can you see that things are moving now from being bearish to now neutral? All right? Which means, traders, this is the important part right here. And this is what you need to understand. And a lot of traders struggle with this. But you need to understand that when the market is in a sell-off, right, there's going to be bounces because we call them waves. There are going to be bounces because the market moves in waves. And so what's happening right now, the market's finishing off one of its wave cycles, and so, or at least wave structures. And so what's happening is it's starting to work its way back. It's going to work its way back as it finds support. Now, we've got a lot of reason to expect that support is at this level. Check this out. We've got support right about here. This is on the daily time frame. All right. We can go down to go up to the weekly time frame. We also saw a lot of support on the weekly time frame as well. That indicated that price is at a very key level. I know and understand that the weekly is still active and the market can break through that, and that'll be fantastic for our prediction. But I'm always going to expect that there could be some sort of pullback. Now, check this out. We use the daily smart gauge here to indicate that we are in a bias, and take a look right here. We may be neutral at the moment right now, but it's 57% at that level, which means that we're not 50-50. We're 57%, which means that we're more leaning towards bullish than we are bearish. All right, and that means, traders, that means that the market may go ahead and shift over into some sort of bullish correction move on the lower time frame. Now let's go take a look at the lower time frame. As I go to the lower time frame right here and I open up the 1 hour, you can see here, traders, that we came very close to this level right here, which is our third wave. And that means that price is going to work its way back up, come back up, maybe go ahead and test the previous wave 1 low right here, and then head further back down south. So how do we handle these trades? Well, we handle these trades by simply going ahead and looking to, if you've got current positions in, start releasing some of your positions, close out those positions, and then when the market rallies up again, start adding those positions back again, because what you've done is you've pretty much gone ahead and done this. You've gone ahead and taken some profit off the table right here, left some trades in case the market continues to fall down. But as the market goes back up again, you're taking whatever you took off the table and you add it back in here so that you gain this in profit. Whatever that movement is, whether it's 150 pips or so, you can bank additional 150 pips once you start selling here and price starts coming back to this level again. There's a lot of reason why price should bounce on the Euro Aussie. Not because we're expecting a huge move to the upside, but only because we're expecting a correction. And if I go back to my gauges that I'm seeing right here, my gauges, and I'm going to go ahead and flip this over to a 4 hour time frame. My 4 hour time frame says I'm still selling. 72% a seller right now on the 4 hour time frame. All right. And if I go to the 8 hour time frame right here, I'm still a seller. So it's clear, traders, if you look at the gauge right now, it's clear that we are still bearish overall, right? We're still bearish overall. But when you go to the smaller time frames, and the smaller time frames will correct itself first. You will start seeing the smaller time frames starting the correction move before the larger time frames. It's an earlier sign of a possible bounce of support or resistance. And that's what we're seeing right now. So here we go. Moving it back to a daily time frame. Keeping my smart gauge on the daily time frame, because I can identify already on the smaller time frame that yes, we're going to go ahead and start thinking about this rally. And then what I may go ahead and do is I may go ahead and switch out my smart gauge and move the smart gauge down to a 1 hour time frame when we get to this level, just to identify when it's time to start thinking about selling again. So this is how we go ahead and predict what we can do currently right now based on the overall direction, and how we can get in and out of the market in that direction and make a whole bunch of pips that trust me, the wife The husband is going to be extremely happy when you bring the pips home. Like they say, when you bring the bacon home. So listen here, hey, that's the deal. This is what I'm going to be doing right here. I'm on the sideline, waiting for a little bit of a bounce up. Once I get the bounce, get back into the market and start getting in on those sells again, taking some pips home. Traders, thank you very much for your time. Thank you for the subscribers. For those that haven't subscribed to the channel, if you like what you see, you like what I've done, go ahead and subscribe to this channel. I would love to get you some more videos as we post it in the week. Make sure you go ahead and subscribe down below. Subscribe to the channel, and I'll see you in the next video.